It is my pleasure to welcome Eli Beracha to the show. He is the director of real estate at Florida International University, and he's got some great insights on the real estate market. He also counsels wealthy investors and I believe family offices. So it's great to have him here so we can look at some forecasting for what might be coming our way. Eli, welcome. How are you?
I'm doing well. Thank you, Jason, for having me.
It's good to have you. So everybody seems like they've been predicting a crash for the past couple of years. Well, really, they were predicting a crash in 2012 and in 2015 and in 16, 17, 18, 19, and certainly at the beginning of COVID. And the opposite has happened all the way along. Now, we certainly have talked extensively about the lock-in effect, with 65% of the country having mortgages at or below 4%. About 90% of the country has mortgages, I believe, below 5%. So these people are pretty comfortable. Are they ever going to sell their houses and solve the inventory shortage problem?
Okay, so let's go back before we're talking about whether the current homeowners are about to sell or not. So the whole idea of a correction is predicted for a long time and it hasn't happened. And the reason for that is because over the last, basically following the peak of 2007. So we know the housing market peaked in 2007. And at that time, we had surplus of about 3 million houses in the United States. Basically, we built too much. People had second homes, third homes, they bought a home just because, etc. And because of that, of course, and many other factors, but that was the main reason we have oversupply of housing and we saw the crash. The crash all the way until 2009, 2010, and basically the music stopped. Builders stopped building altogether, almost altogether. And even when they start building, let's say in 2011, 2012, they build a lot less than needed. And when I say a lot less than needed, just talk about, the housing formation in the United States, how many houses you need versus how much they build. They build about 300 to 400,000 houses less every year. And that was 2011, 12, 13, 14. I can continue basically until 2000. And then, of course, 2020, 2021, no building because people did not work, etc. We see almost over a decade of under construction that brought this oversupply of about 3 million houses to actually an undersupply of about 4 million houses.
Yeah.
So right now we're sitting at an undersupply of about 4 million houses in the United States. We are building about as many houses as we need right now, even though high interest rates do not help the situation because it's more difficult to build when the cost of financing is just more expensive to have funds for your construction. And that is basically the foundation. Because you have undersupply of an asset that everybody needs, that put kind of a floor below real estate prices. Now, in addition to that, of course, now we're looking at today, then you have people that have very low interest rates, 3%, 3.5%, 4%, even less than 3%. So many people like that. And for them, if they want to upgrade their home, number one, because housing become more expensive, upgrading their home become expensive because another 50 or 100,000 doesn't really make a difference. In many cases, if you're in Florida and you have a house that now is worth, let's say 800,000, you probably need to put at least another 3, 4, 500,000 to see a difference in terms of the quality of living. So that is a significant amount of money. That's number one, because housing is so expensive. And then not only that, you'd have to give away your mortgage at 3.5%, 4%, and take a new one at around 7% right now, maybe even a little bit more. And that is making it so undesirable for so many people, and they just stay put. So that's a dent basically on the current inventory levels, and again, keep housing prices robust.
So I want to ask you about the housing shortage and why some are skeptical. They say that's not really true. There isn't a housing shortage. But before I do that, just an earlier part of the conversation, the underbuilding that happened following the Great Recession, why did that happen? Was it just the developers were too skittish and scared, or were they unable to obtain financing? Was it just too expensive to build and they couldn't make the profit margins work? Was it a combination of all three of these things and maybe more things? Why did we have that underbuilding? I mean, it's sort of easy to look at demographics and know what the demand side will be. I mean, you can pretty much calculate housing formation, but why did we have that underbuilding for really well over 10 years, maybe 14 years of underbuilding?
Okay, so we need to understand that the construction industry, unlike, for example, the automotive. Okay, so let's talk about cars, right? I mean, how many players do you have? 20 manufacturers of cars between Tesla and Mercedes and BMW and Ford, 20, maybe 30.
Mhm.
They're the players that based on, they have the models, they're predicting how much demand, how many cars basically become obsolete, how many cars we need, etc. And they build according to demand. And, sometimes they're overshooting, undershooting, but basically they're getting it right on average. The housing industry is very different. You have some of the large builders, KB Home, DR Hortons, and the likes. But then the vast majority is a lot of tiny builders, anywhere from the builder that build, a townhouse here, another townhouse there, a few single family home, a spec home here, etc., all the way to maybe slightly bigger that maybe build, 20, 30 units a year, things like that. They do not work together. They do not have these models that are basically telling them how much houses are needed. And because of that, there's no basically collective effort to address housing need. They just kind of build on opportunistically. And during the recent housing collapse of 2007 to 2009, 10, basically all of those developers disappeared. They went bankrupt. And a lot of people say never real estate again. And because they say never real estate again, and because they went bankrupt and they're unable basically to create supply, and a lot of that, even those that says, okay, maybe I'll get into real estate, just become very, very fearful, very cautious, maybe overly cautious, which is a common psychological reaction to what happened after a severe correction, a crash. And this over cautiousness after the correction is why we have such underdevelopment over such extended period of time. It's only until basically last year that we build as many houses as we need, but we still have a shortage of about 4 million. Think about that.
Right.
If we build 400,000 more houses than needed every year from now on, it will still take us about 10 years to get to equilibrium. And
Right.
making things even worse, the housing undersupply is actually worse because of the choice of where people want to live during and after the pandemic. So we know that before the pandemic, it was, okay, people moving into the downtown, the center of the cities, et cetera, et cetera, et cetera. And then during the pandemic, and still until today, people actually choose to move into the suburbs. And they say, you know what, I don't have to be in the office every day. Many
Right.
people working maybe 3-4 days a week, sometimes 2 days a week. So it's okay if I'm somewhere else. I'm doing a lot of my meetings via Zoom. So I don't have to be in the center of everything. I'd rather have a slightly bigger house somewhere else. And because unlike iPhones, whatever it is, when you can just move them from one place to another, where you have oversupply somewhere and undersupply somewhere else, you can just move them. With housing, you cannot do that. So if you have too many houses, one location, less in somewhere else, you're basically stuck with this imbalance for a very long period of time.
Yeah, so that is pretty staggering what you said. You said if we were to build 400,000 houses each year for 10 years, we would still be undersupplied.
400,000 housing more than we need. So we need to build as many as we need, plus 400,000 houses each year. That will take us till 10 years in order to get back to equilibrium.
Right. So how many are we building now? Like what's the number on new houses every year,
I think it's somewhere like, 1.1 million or something like that. Don't
Okay.
quote me that exactly, but it's
So
somewhere.
we basically have to increase that by 25% or 33%,
Yeah, and
something
it's
like
difficult
that.
and it's difficult to do now because land prices are high,
Yep.
construction prices are very high,
Mhm.
labor is difficult to get,
Yep.
and you have high cost of financing. So all those things together actually force us to build less houses than needed. You
Mhm.
have so many builders that are basically sitting on the sidelines because they don't want to borrow too expensive, because it's very difficult for them to get workers, etc. It
Yep.
used to be that you can take the number of starts, housing starts, the data that is published, weekly or I think monthly. You can see how many housing starts, and then you go about 2 years forward and you see how many housing were completed. And it's, started here on average, 2 years later, those houses being completed. Now this gap actually is becoming larger. So there's a lot of those housing permits. Okay, we permit you to start building a home or multifamily, whatever it is, and then you don't see the completion sometimes over 2.5, 3 years on average. That means that a lot of those builders getting the permit to build, and they say, you know what, I'm waiting. Or simply it takes them longer because of all these obstacles I just mentioned, cost, labor, etc.
Ellie, here's the thing you didn't say, which I think is maybe more sensational than everything you did say, which was really pretty shocking. If you folks, if you don't think this housing shortage is a very significant thing, think again. Okay, that's the first thing. But here's what you didn't say. You talked about a house as though it's a sort of singular entity, like it's just a widget, right? It's the number of housing units. But what you didn't say is that the price segment of houses being built has gotten much, much higher and more expensive. I mean, the train has left the station for entry-level housing. Nobody can afford to build it. The houses builders are building are the houses they can make a decent profit margin on. And those tend to be more expensive. I mean, have we just totally lost forever in America the concept of like $150,000, $200,000, $250,000 house? I mean, it's certainly it's not going to be a new construction house.
I don't think you're going to see $150,000, $200,000 homes, brand new homes. But probably, ever is a strong word, but just think about inflation and,
right.
Price of everything. Those prices are probably not here. Now, it doesn't mean that builders will forever continue to build luxury homes. Right now, because construction is so expensive, land is so expensive, it doesn't make sense to buy land for so much and then build a cheap or inexpensive home appealing to people with, less means. Just the math does not work. Yeah. Now, governments in certain areas are making effort to give subsidies and incentives, to address this issue. It works well in some areas, but still a little bit too little. So yes, I mean, affordability is clear an issue, which is why you saw rent prices climb together with housing prices. And that is also very important because people do not pay attention to this. They say, okay, housing price went up fast. It is a bubble. People, they confuse high prices with bubble.
Right.
Bubble, without getting too technical, bubble is basically when you have prices that are not supported by fundamentals. Let's say from 2000 to 2007, you have very significant increase in housing prices and rents were basically stagnant. That means rent, which are the support or the fundamentals of housing prices, did not support those housing prices. Today, we have a very different scenario. We have housing prices that skyrocketed. They went up very high. But at the same time, you have rent prices, which is the ability and willingness of people to actually pay for homes on a month-by-month basis, not a speculation. It's not like, I'm going to pay for this house $500,000. I don't care if it was worth $200,000 because next year is going to be more $700,000. Rent is a real payment that people actually consciously willing and able to spend monthly. And those rent prices went up almost hand in hand with home prices, and they're providing a lot of support for home prices. So that is another reason of why I do not believe that a correction is around the corner. And when I say correction, I mean, it is possible you may see, a 5-10%. I don't think so, but it's possible to see that, but nothing to the magnitude of what we saw in 2007, 8, 9.
So what do you say to the folks out there? There's so much clickbait and doomerism. I surf around YouTube and I just see it all the time. I mean, it's really ridiculous how these people play on people's emotions. They know that we as humans focus in on negativity because it's a survival mechanism, right? We needed to do that throughout our history on this earth. If we didn't focus on negativity, we would not have survived, right? But now we live in this abundant culture and, negativity, that focus doesn't really work very well anymore. But the fact is, it's still in our primal programming. They say the inventory shortage is false. It's not really true. There's all these people are going to be selling their Airbnb properties, this, that, and the other thing. There's all these new homes that are coming on the market. Now, I disagree with that. I think the inventory shortage is extremely real because my real estate company lives it every day. We know how investors struggle to buy properties,
It is simply a fact. I mean, there's really, you cannot argue with the number of household formation in the United States and the unit being built every year. And when you add them both together, you see basically have too few of those. And then you see other things like, for example, the percentage of young adults, talking about people between age 18 to 35 that actually live with their parents. Mm-hmm. I don't remember the exact percentage, but
they represent shadow demand.
Yes. So
Yeah.
those people say, okay, so what do you mean? What do you mean short of housing? Are people on the streets? Well, I mean, we have homeless problem, but that's really not a housing problem. You know that most homeless problem is it's a different issue. It's not because
Yeah.
short of
Sure. Sure.
housing, it's mental issues that need to be addressed differently.
Oh,
People
oh,
do live somewhere, but how do they live? So first of all, many of them stay at home for longer. So you see the share of young adults living at home is significantly higher than it was 5 or 10 years ago, because they can afford to live by themselves, so they're postponing that. And people living with roommates for longer. So it used to be like, okay, I'm in college, I live with roommates, and I'm getting out, and then I'm not living with roommates. Today, especially if you live in a place that is more expensive, living with roommate is basically inevitable. And then also you need to look at housing units and the choices people make. So for example, if you lived here in Brickell, I'm in Brickell in Miami, and a lot of people say, okay, I'm going to get myself a 2 bedroom. It's me and let's say my wife or my girlfriend, and I'm going to get myself a 2 bedroom. It's 1 bedroom for us and another bedroom as an office. That was when prices were X. Now, when prices are 2X, they can say, you know what? Maybe I don't need a 2 bedroom. Maybe I'm okay with a 1 bedroom, and I'll just have a corner in the living room and put a little desk, and that become my office. So again, those choices, first of all, you cannot forever go from a 2 bedroom to 1 bedroom. That's fine, but where are you going to go after that? Are you going to go to a studio? Are you going to go lower than that? So those trends that you can make them one time, you can delay moving away from your mom's basement. But again, you delay it for a year, 2 years, 5 years, 10 years. Eventually, you're going to move out. So all these, we're going to call it either shadow demand or pent up demand or whatever it is real. So when you're looking really at the numbers of housing being constructed and household formation in the United States, it is clear that there is housing shortage. This is not an argument.
I couldn't agree more. It's just not an argument, but all the clickbait, fear porn purveyors, they try to make it like it's a debate. It's just not.
I have look the Airbnb argument of people selling the Airbnb.
That'll add a little bit of supply, but mostly those houses are higher end homes. I mean,
Yes,
they're not entry
yes,
level houses for Airbnb.
yeah, and at some point maybe you have a little bit too Airbnb. So what? All of them going to get sold? No, I mean basically there's a reason why it is Airbnb. Maybe it's going to be formulated in a different way. But also, I have a friend, for example, send me this link. Oh, what do you think about this? And I'm looking at the numbers, and it's like, wow, it's so wrong. So whoever created that particular link that I received, the numbers were so wrong, like 1,000 to 1. It wasn't like, oh, they say it's 2 and it was really 2.5. It was, they say it's 2 and the number was 200 or 2,000 or something like that. And people buy into those, trying to find a story for whatever it is they're trying to justify. We do have a housing issue in the United States. Sorry, even you look at multifamily, and right now you have multifamily construction at all-time high. And people say, well, they're building a lot. True. Number one, because it's the easiest product to build quick,
Right.
and we need a lot of housing in it. Number two, you need to realize that multifamilies and condos, it's only about 17% of the whole housing stock in the US. Now, if you live in Southeast Florida, you think that this is all that there is,
Right.
condos and multifamily. But, move away a little bit from the center of the city, even in Southeast Florida, but definitely
It's single family homes. Yeah.
Yes, it's single family home. And yes, you build a lot more of those condos and multifamily because you can build them quick and because the land price actually justify the deal. But building faster on the 70% does not mean that you are oversupplying the market.
Right. So here's the question, though. Is there anything that could disrupt the housing shortage? I mean, what I've been saying on the show, Eli, is that we could have a reduction in population, i.e. reduction in demand. That would be terrible, right? Obviously, you know where my head is going there. Or we could have a disruptive technology that could create a lot of new supply inexpensively. It's certainly not going to be 3D printed homes. I've done extensive research on that, hired a consultant, thought of opening a construction company myself to do 3D printed homes. That's a myth, okay, that 3D printed thing. There just doesn't seem like there's any real disruptive technology. But I also say it's not just a disruptive technology that would make housing cheaper. It would also have to be a disruptive technology in transportation. to allow people, and really an energy as well. 3 disruptive technologies are needed to allow them to build on cheaper, farther away parcels.
Yeah.
You'd have to have really 3 disruptive technologies: a cheaper construction technology that's disruptive, a cheap transportation technology, and a cheap energy technology, because transportation takes energy. Is there anything on the horizon that could solve the supply shortage problem?
I think what you say is very, very true. I mean, and those things are coming, but they're coming slow. So, for example, I would live farther if I have a driverless car
Yeah,
because I
me
can
too.
sit in the back, do my work on a laptop, and I don't care that I'm commuting to the office for an hour and a half. Disruptive technology, Zoom did a lot. Basically, it cut our commute by 40%. If you're working, let's say 3 out of 5 days a week, if you work from home, you basically cut a commute by 40%. And even more so because the days that you are travel, there's less people on the road on average. So those things are happening, but you need something major to happen until those things really take effect. So for example, technology like Zoom, it was here for a while.
Yeah.
And
Nobody learned how to use it before the
Nobody was really
pandemic.
using it extensively until we had to. COVID came and then everybody became, okay, we're using Zoom. Yep. So the same thing, driverless cars, they're here, they're being perfect and all that. Nobody's really using them. They're not really approved, etc. It's going to be a long road. Cheaper ways of construction here yet, but a lot of those things need to have an event that basically force you that you have to use them in order to accelerate that. I mean, I heard things like, for example, in Germany, for example, manufacturing during the beginning of COVID and when the war with Russia and Ukraine started, they needed energy and things like that. They did things that people projected that will take them maybe 5 years. They did in 6 months. Well, why? Because they had to. And if not, it would take them 5 years and maybe even more. They will be maybe behind schedule, et cetera, et cetera, et cetera. So I don't say never. So, of course, things can happen that will create, it can be a war, it can be a big conflict, it can be a sharp economic decline, it can be a lot of things can happen that, of course, will slow the housing market. But at the end of the day, the fact that you have shortage of a commodity that everybody needs is prevailing. Basically, it's here to stay for some time.
Yeah, I agree. What are your thoughts or forecasts on interest rates? I mean, just recently they came down a little bit, but there's still, the cost of money is more than tripled since the low point. Are we going to see a real Fed pivot anytime soon? Or do you think they're just sort of going to stay the course of doing nothing for a little while? Or, I mean, that all ties in with employment and inflation, of course.
So if you're watching my Instagram, if you took any of my classes, I teach seminars, etc., I've been projecting the fourth quarter of 2023, which is right now, interest rate to begin coming down. And actually, I'm happy to say that I begin to be right. So we saw the first drop in interest rates basically about a week and a half ago, that for the first time they ticked down significantly. I mean, it's true, they went up much higher than people expected before, but they ticked down significantly. And then today, we're speaking now, what is that, November 14th. Today, there's another tick down, basically because we saw lower read on inflation, 3.2%. And that gives the market more confidence that the Fed is basically stop increasing. And when they stop increasing, whether they're going to tell you that or not, the data is telling you that. The data is telling you that most likely they're done increasing. 10-year treasury came down significantly today and mortgage rates should follow. And I think that will be a trend that will slowly continue over the next few months. I mean, don't expect rates to start coming significantly, gradually, very quickly. It's not going to be 3% or anything like that. But I think just looking at where interest rates are now, the fact that they're starting to momentum on the downside, the spread between the 10-year treasury and the mortgages, which right now is much higher than it used to be. It's about 1% higher than it should be. That by itself gives me some confidence. We can see mortgages in the high fives before too long. Mm-hmm. What is before too long? Maybe next year.
I'm with you on that. I've kind of predicted we'd see mortgages settle somewhere in the fives, but what does that do to the market? I mean, it's sort of this impossible problem to solve. If rates come down in a low inventory market, that's just going to light prices on fire more than they haven't really gone down now. They've been going up. So that's going to make the price problem even worse, right? Because housing will become slightly more affordable. Then you also have the people that won't sell because the delta between the current mortgage rate and the mortgage rate they have on their existing mortgage with 28 years left is so big that would lower that delta a little bit. So if they really wanted to move, it might peel off a small amount of people, right? If you
Yeah,
have a
but
2.5% mortgage and you got to pay 5.75%, you're still probably not anxious to sell,
true.
but
But every year, every month, or every day, you have still more people that they want to move and they're like, well, I'm not going to do it because interest rates are too high, whatever it is. The new reference point, and psychologically, we call it anchoring. The new reference point now, when interest rates are going to go down to 5, it's not like, oh, they used to be 3, now they're 5, so it's too expensive. The new anchor point is it used to be 8,
Mhm.
now it's 5. Wow, it looks cheap again. So
Yeah.
people have very short memories. And at the end of the day, they need to move. So first of all, there's people that need to move because of changes in family circumstances, whether it is divorces, marriages, more kids, move because of jobs, many things like that basically force them to move, and they can resist it for a while but not forever, so they're going to pounce on the opportunity when interest rates are a little bit more reasonable. And then those that are by choice, that they did not make the choice when interest rates are 8, but they would make the choice when interest rates are 5. So that would relieve some of the inventory. People will be moving a little bit more. In terms of prices, I think the reason that prices held so well, even though interest rates went up so quickly, is because it's anticipation of they're going to come back again. So a lot of the sellers kind of holding, and buyers say, you know what, I'm waiting a little bit. When interest will come down, I don't expect a spike in prices. I maybe expect, maybe a little bump in the beginning and then going back to normality of, 2 to 3% on average, because housing are very expensive. Basically, it's going to bring housing prices or affordability of housing to something that's a little bit more attainable. Right now, with 7 or 8% people have to pay, it's unattainable for most people. It's not like they don't want to buy; they just can't. They're not being approved based on their, debt to income or payment to
So,
income.
so that actually leads to another good question. In many cities around the country, it's literally 52% less expensive to rent than to buy right now. So, to me, that puts a lot of upward pressure on rents. What do you think about rents?
Again, that's the equilibrium. So rent took a breather a little bit recently. They came down a bit. They probably stay stagnant and start climbing up. And then the cost of ownership, because interest rates come down, will go down again. So this 52% or whatever number, I have a different number than that. I look at something about 20 to 25%. That will probably reverse over the next, I don't know, a year and a half or so as interest come down and rent climb a little bit higher. And think about also all these people that are renting and say, you know what, I'm renting, I don't want to buy a home because it is cheaper to rent and all that. When you get this new notice and your rent is the same or even higher year after year after year after year, and it's already difficult for you, and you feel like you do nothing to yourself by renting, whether it's true or not, at least that is the feeling. You say,
Mhm.
you know what, I'm just gonna take the hit and go buy a home.
Right.
So that increased demand.
Yeah, it's a fascinating market we're in. I have not seen this type of situation before where we have this sort of stagnant market with low sales volume, but prices still appreciating because there's just no inventory. So, very interesting to talk to you and kind of think about where it's going. Please give out a web link or social link again, or whatever you want where people can find you.
Okay, so my name is Dr. Eli Beracha, and I guess my Instagram is at Dr. Eli Beracha. Please follow me. Thank you so
Ellie,
much.
thank you so much for joining us. We appreciate having you.
Goodbye.